Hi, everyone. So I wanted to take a few minutes to demonstrate some examples of recording our basic accounting transactions underneath our accounting equation. So what I want you to do right now is I want you to pause the video and I want you to go to Canvas to our Chapter 1 module, and I want you to open up and print, or however you want to do, look at it on your screen, the file that says transactions for chapter 1 video recording transactions. Okay, so I'll wait for you. Go ahead and get that file. Okay, so now that everybody is looking at the transactions, give me a second. I'm going to share my screen with you. Okay, so here I just have put into an Excel spreadsheet, I have put our accounting equation headings, assets equal liabilities plus owner's equity. And then underneath those three categories, I have added in the specific accounts we'll be using under each one. Okay, now as we've discussed before, we know that the specific accounts can change according to the problem, but the three categories will always remain the same because this is the accounting equation. Okay, so let me go right here before we get started and insert a little column so I can put the letters of the transactions. Okay, or the numbers. So if you're looking at your form, I've got 6 transactions that we are going to enter. So number 1 says paid cash for supplies, $600. So just so we can keep up with it, I'm going to come right over here and put, oops, not in that one, in this one. I'm going to put number 1. So if we paid cash for supplies, then that means I spent some of my money. Every time we see that word paid, we know that we spent money. If my cash, if I'm spending it, then my cash is going up or down. That's right, down, because I spent the money. So I'm going to go right here underneath assets, underneath cash, and I'm going to put negative 600. Okay, so I know cash, an asset, is decreasing by 600. Now, it said that I paid cash for supplies. What kind of an account are supplies? That's right, they are an asset because they have value. So if I purchased or bought more supplies, then the balance in my supplies account is going up or down. That's right, it's going up. And it's going up by how much? That's right, $600. So I'm going to have a positive 600 underneath supplies. So here's the big question. Is my equation still in balance? Well, if I look at it, I've got a negative 600 to cash and a positive 600 to supplies. So that actually equals out to be 0, right? And then I have nothing on the other side of the equation. So my balances are 0 equals 0. So I'm still in balance. We want to make sure, especially while we're learning, that we double check after each transaction to make sure that we are still in balance. So remember, this is what we call every transaction has what we call at least a twofold effect on the equation. You can't just affect cash and stop, because if you did, our equation would no longer be in balance. So let's look at number 2. The owner invested $5,000 into the business. Okay, so the owner invested money. That means the business is getting money. If we are getting money, then the balance in our cash account is going up. That's right. So I'm going to come over here on the correct line underneath cash, and we're going to have a positive $5,000. We got the $5,000 because it said the owner made an investment. We've discussed how anytime the owner makes an investment or a contribution to the company, then the value of the company goes up. So equity is increasing. What specific account do we use to record owner investments? That's right, the owner's capital account. So I just made myself the owner on this one. So we've got Dancy Capital. When the owner makes an investment, is the balance of the capital account going up or down? Up, correct. Because the owner made an additional investment. So the balance is going up. So am I still in balance? I increased this side of the equation by 5,000 and I increased this side of the equation by 5,000. So yes, I'm in balance. I'm gonna here, we'll put a little highlight right there in that column so you can see. So increase this side by 5,000, increased on this side by 5,000. Still in balance. Okay, so let's go over here to number 3. And number 3 says, received cash from customers for services performed. If I received cash, then do I have more cash or less cash? If I got it, I have more, right? So cash is going to go up by $8,000. If I received cash for performing services for my clients, then that means I earned what? That's right. Oh, excuse me so much. That means that I earned revenue. Remember, doing whatever it is we're in business to do is earning revenue. So performing services would be earning revenue. Have I earned more revenue or less revenue? I've earned more. So the balance in my revenue account is going up. And our generic revenue account that we've been using so far is called fees earned. Now remember, fees earned is over here under equity because fees earned is one of the things that increases equity. So I'm going to come over here and put a positive 8,000. Is my equation still in balance? Yes. If I did the math, I would have 13,000 on this side and 13,000 on this side. Number 4. Number 4 says purchased equipment on account $2,000. If I am purchasing equipment, then I'm getting more equipment. Equipment is an asset. So over here under assets, we see equipment. And if I'm getting more, then that means it is going up, correct? So increase equipment by 2,000. Now it says I purchased it on account. And we know that when we purchase something on account, that means we're going to pay for it later. If I'm going to pay for it later, that means I am now in debt. And we know that liabilities represent our debt. And the specific account we use at this point for our liabilities is accounts payable. So if I made a purchase on account, do I have more debt or less debt? That's right, we have more debt. So I'm going to go over here and increase accounts payable by 2,000. Still in balance? Yep. Increase this side by 2,000, increase this side by 2,000. Then let's go over here to number 5. And it says paid rent for the month, $1,000. Every time I see that word paid, I know that it means I spent money. Think about you, your personal money. When you pay something, the amount of money you have goes down. So when I see that word paid, I know cash is decreasing. So I'm going to put in a negative 1,000. It says that we paid rent for the month. Paying our rent is an expense of doing business. Remember, expenses are the cost that we incur in the process of earning revenue. It takes money to earn money. So paying our electricity bill, paying our rent, paying our employees, paying for advertising, those are costs that we incur. Those are expenses. So let's remember that expenses fall over here under owner's equity. And we know that expenses are one of the two things that make owner's equity go down. So we're going to go over here to rent expense, and I'm going to put negative 1,000 because paying that expense made my equity decrease. And finally, let's look at number 6. Number 6 says the owner withdrew $1,200. If the owner made a withdrawal, the owner is taking money out of our business. So that means our cash is going, that's right, down. So over here under cash, I'm going to put negative 1,200. What else happened? What other part of the equation was affected? If the owner made a withdrawal, then we're going to record that over here under the drawing account. In this example, Dancy drawing. And we remember that drawing is the second thing, along with expenses, that decreases equity. So anytime the owner makes a withdrawal, then that is going to be a negative to owner's equity. So I'm going to put negative 1,200. So after every one of these, we know that we have been in balance. Let's double check at the end and make sure. If I get the balances for all of my accounts. So let me take this right here, and I'm just going to put a little underline so we'll know that we are doing the math. We come up with a balance for cash. We've got negative 600, positive 5,000, positive 8,000, negative 1,000, negative 1,200. And that's going to give me a balance in cash of 10,200. We only had one number under supplies, so our balance is 600. One number under equipment, so it's 2,000. One number under accounts payable, so it's 2,000. Capital, one number, 5,000. Drawing, only one, it's a negative, negative 1,200. Fees earned was a positive 8,000, and rent expense was a negative 1,000. So we want to make sure that we get our balance for every single account, because remember, we will use those balances when we go to create our financial statements. And we also want to use these balances right now to make sure that my equation is in balance. So if I say 10,200 plus 600 plus 2,000, then I get 12,800. So my overall balance, I'll just type it in this cell right here, on this side is 10,800. If I say 2,000 plus 5,000 minus 1,200 plus 8,000 minus 1,000, then I also get a balance over here of 12,800. So I know that my equation is still in balance. Hope this has helped you understand. Make sure we always keep our equation in balance. So notice we never just wrote the number one time. I had 600 in 2 spots. I had 8,000 in 2 spots. That's usually the hardest thing for people to remember when they first get started. Okay. And one last quick review. Remember, owner's equity increased by capital, increased by revenue. So under capital and revenue, we have positive numbers. Equity is decreased by drawing and expenses. So notice in those 2 columns, we have negative numbers. Stop sharing my screen. Hope this has been helpful. Thanks for watching, and let me know if you have any questions. See you soon.